Hello, welcome back to another lesson or tutorial on trading. Um, I discussed a little bit about gap up, professional gap on the stream yesterday when we had the big move on Nvidia, and I figured this would be a good time to do a video about gap up. As you can see in the title of this video, trading the gap up. It's tricky. First and foremost, when it comes down to using TA, it is about trying to remove the emotional part out of your trading. TA help you take advantage of other people emotional reaction, right? That's the best way I can describe. One of the good aspects about using TA is it helps you take advantage of other people emotional reaction. Let's take a look at Clorox. I discussed Clorox many times over the past few months that it's kind of meh, dead money. It's going sideways, and then it's a breakout, right? For those that follow me enough, I like Clorox, of course, on this down move. Keep that in mind. When it comes down to September, keep your head on a swivel on things that you like or have in your portfolio, because if a stock is a money loser by September, there's going to be likely one of these tax loss event. We saw a lot of this in many stocks, right? So I will start to remind people in August and September to watch out for this kind of move. So yeah, I like Clorox here. I got out of Clorox up here, and it's been sideways for a while, right? And we had this move up. The question is, the very first thing that I do whenever there is a gap up is I take a look at where it stopped, why it stopped there. Is there a good reason? Is it a random spot that the stock stopped where it topped out, right? So for now, let's draw a line so that we can peer back in history to see if there's any rhyme or reason, or this is not a random spot. A little quick reminder, my chart can be messy because the longer I trade a stock, the more lines you are going to see on the chart. It is what it is. I do try to clean up once in a while for my own use, but for your own good, you draw the lines, you use the chart however you wish to draw the line and how clean you like to keep it. I don't mind it messy. I do draw a line eventually. That's why you don't see a lot of Fibonacci lines on any of my chart, because it is already too messy even for me. Occasionally I do go through a cleansing and just remove all the lines occasionally, but this is an example of a chart that I have traded this stock over many years, or at least follow it over many years. So there are lines, and the longer I stay with a stock, I'm sure if you watch my videos long enough to look at Google, Meta, Amazon, Apple, is completely crazy, because I trade those stocks for years and years and years, and many of those lines was there 3-5 years ago, right? So all right, so let's draw a line for the purpose of this video right here. Okay, add a line, and then we can look back to see if it's a random spot. My hunch is it's not going to be random. Okay, so I'm going to color this line for now. Let's make it like nice and bright and white, okay, so that we can see and make it nice and thick. All right, so no doubt you can see that it is a level of resistance, right, in the past. Let's go back even 3 years. Well, ain't that something? Yeah, it was support at one point, and then it become resistance, resistant, resistant. breakout, support, couldn't hold, failed breakout, and now we are back to the scene of the crime. Ain't that something? It always amazed me to go backward to see something like this. It's not random. Okay, all right. Let's do one more expansion into 5, but let's do 10 years for the sake of this video. Okay, once again, logical, right? Tough resistance, sure. It's the range. Once again, there is a range, a zone, right? Not to the exact dollar here and there, right? But look, see that? Not random. I can't stress enough that, the longer you start to use TA, the more you see that there's a reason why my chart has a lot of lines. Your chart too busy. It's busy for a reason. All right. So now let's remove this line. We don't need the right. We can see it. Let's remove it. All right. So back to the main topic. I do not chase or buy into a gap up. I give it time. Give it 3 days. Give it 2 days. Give it more than 1 day. Right? For example, take a look at this gap up that we have here. What happened? It met a channel high. And if you know me and follow me long enough, you know I like to sell on channel high. I like to buy on channel low, right? So yeah, it's not a surprise that it got a swift reaction on channel high. And then this is one of those scenarios that there's 3 scenarios that you see in a gap up, right? One is gap and slide. That's how I call it. I'm not sure how other people name it, but I have named it for a long time for those that know me. That's the last thing you want to see is a gap and slide because it couldn't even hold. All right, it couldn't hold. It nothing but a downward move from the gap up. Seller was out in force, right? So that's the last thing you want to do. That's why you want to give it 3 to 5 days to see if it can hold. And if you know me and follow me enough, on the previous lesson, I talk about level to level, right? Once it give up the gap, let's zoom in on this, okay? So that's the gap up. And then if you give it a couple days, for sure, the spot that you want to follow is the low of the gap up. So on the gap up, you see the low was 161.33, right? For sure, if you want to buy, you want to chase the gap up, that would be the highest order I would put in. But I wouldn't do in this case because of the channel high. I see this coming, right? You should see this coming if you draw the channel. So cautious. And then of course, level to level. You then look at the 100 MA. Is this gonna hold? After 2 days, 3 days, it couldn't. And then of course, it gave up all the others. So yeah, it's a stay away. Now, let's get back to the recent gap up. We know it got to a level that was support and then resistance. So the last thing you want to do is buy into this. Just wait. All right? Wait for what? You have the gap and slide. You can have a gap up, consolidation, and upward resumption, right? And then you can have one of those few rare scenarios where you can have a gap up and go. For this video, I will show you some example of gap and go. But for now, we wait. I will probably go back to Clorox the next few weeks just to show you what happened to this stock on the gap up, right? So for now, wait a couple days to see where it's going. Most likely you get your chance to buy. So let's take a look at another stock that I mentioned yesterday on my stream, NVIDIA. Crazy move, big gap up, Is it a good time to chase? The answer is no. Take a look at the last gap up. Let's zoom in on this. If you look at the low of day, you see that it was 366.35. I normally look at the low of day as well as where this wick is. Okay, the top of this wick is where it is roughly 377.48, right? So from here, so basically it's like 377.5 to the low of 366.35. So that's, to me, is the zone where buyer that miss this move might come into chase, to FOMO in. This is the could be a professional gap. A professional gap is not going to have big money coming in and let it gap and slide. Okay, big money is going to come in, the big boys going to move in, and they are going to buy in and support and add more to it. That's one way to talk about a professional gap. So if you look at this candle and you see that, okay, but perhaps 377.5 down to 366.5 is an area that you want to buy, you can throw in a few small order, no doubt. Start out down here, right? You can put down here and then slowly add some more smaller order, and over time, in the next 2 weeks, guess what? You would have multiple chances to add below 377.5. I did, right? I did. But that's how you're trying to trade the gap up, a professional gap up. You're not likely will get a chance to buy it at the low. We love to. It can happen, but you also should be willing to pay a little bit more. And I use that bottom part right there, where the candle is the bottom, to put in orders. Okay, let's zoom out and take a look at this. Right, so on this, it's a small gap, but it's a big candle, right? It's a big fat candle. Where would I, first of all, I'm not buying. Okay, I'm not buying. The likely spot that I would nibble, add back what I sold, would be, of course, the low of the candle, which is 636.9. But now that would be where my order is. I don't need to put anything higher. Okay, that's $27 below where it is right now. That's a big chunk. You know, that's a good 3.5%, 4% kind of move down. So yeah, no need to chase it. I'm more likely to buy this because this gap is so little, right? It's a very tiny gap. You're talking 631.91 and then 636.9. Yeah, I mean, you're talking $5 or so, but still, it's not a big deal. For NVIDIA can close that gap on a fast wick. If you want to put an order in, I wouldn't mind throw in an order right there, just so that, you know, if there's any kind of fast wick down, I would nibble back a share or two. But to me, this range right here could be the new support. Hard to say. Okay, time will tell. But I will draw in the zone for now, just so that we have something to talk about going forward. The zone. Okay. You know me, I love the zone. We'll see. We'll see how this play out. If this is gonna be a new support level going forward. It might take time to digest the big move. Okay, so that's NVIDIA. Let's go to another stock that also gap here and there. All right, this is a good one. Gap. Once again, if you look back in history, why did it stop here by random? Is there a random spot? So if you go back, no, it's not. It's not random. Okay. See that's the move. No, this was support and failure. A big, it was support and then it become resistant. And on top of that, there's a lot of bag holders going back to 2022, much higher, right? So is it unthinkable to see a lot of people say, fool me once, fool me twice, get me out, right? That's what happened. Even though it was a likely a professional gap, but sometimes the professional gap can't hold because the the emotional response of a large amount of bag holders that suffer for too long and miss out on two previous spot up here can't take it, right? So there are sell off, but guess what? It filled the gap, bounce off the 20, and up we go. So once again, if you wait and see it continue to break down from the low of the gap up day, buy at the next level. Once again, if you follow the rule of level to level, you got a great deal. And then it go. Look at this one. Another gap up, right? Sure, if you wait 3 or 5 days, you miss it. That's okay. Wait for the next level, the 20 MA, in which it failed, right? There's a lot of gap and failure here. But the best solution is not to chase it, right? Look, you chase, you lose. You chase, you lose. If you buy at the key support because it was resistant, yeah, beautiful. Gap up. Once again, take a look. Remember what I said? The order to put in on this professional gap like this. Sure, you want to throw in an order at the low of 243.65, you might get lucky. But if you throw in an order in where? At the low of where the candle is, right here, not the wick, but the candle, which is 348-ish, guess what? 3 days, 5 days later, you in, right? You don't need to chase here. You don't need to go crazy up here. Be disciplined. I hope the main point of this video is stay disciplined. Have a set of rules that you follow, but it works, right? And if you watch this video and pay attention to everything I said and go back and call up any charts you want and apply the same rule that I just laid out for you, likely you made the right trade, the right entry points on a gap up instead of chasing and paying too much, right? Thank you for watching.